You've heard it before. The rich are getting richer, and you're left wondering, how do they do it? The answer is simple: investing. But let's face it, the world of investing seems like a giant puzzle, especially if you're young and just starting out. The fear of losing money keeps you stuck, while opportunities are passing you by. What if I told you that by the end of this video, you'd have the blueprint to start your investing journey, no matter how little money or experience you have? Stay with me, because today we're breaking down the ultimate beginner's guide to investing in a way that will leave you confident and ready to take your first steps. You work hard for your money. You save diligently. But inflation is eating away at your savings, and you're left wondering, is this really enough for my future? You see others making money in the stock market, real estate, crypto, and you feel two things: fear, what if I lose everything? And curiosity, what if I don't? The problem is, most beginners think investing is for the rich, complicated, or outright scary. So they avoid it and keep their money in a savings account that barely grows. Here's the truth: doing nothing is more dangerous than taking calculated risks. The longer you wait, the more you lose time, potential gains, and the chance to secure your financial future. Now, imagine this: a future where your money works for you while you sleep, travel, or focus on your passions. You start small, with just 500 or 1,000, and slowly grow your wealth over time. This is the power of investing. The first step: understanding the basics. Let's break it down. Point 1. What is investing? Investing is simply putting your money into assets like stocks, mutual funds, or even real estate, with the expectation that it will grow over time. You're not just saving, you're making your money work for you. And before you think, I don't have enough to invest, let me tell you something. You don't need a lot to start. Platforms like Zerodha, Grow, or Pay-T-Money allow you to start investing with just 100 or less. The key is starting. Point 2. Understanding risk versus reward. Here's the reality: every investment has some risk. The stock market might dip, real estate values might fluctuate, but the long-term trend? Upward. Historically, people who invest wisely over the long term, 10, 20, 30 years, almost always come out ahead. The question isn't whether you should take risks. It's, can you afford not to? By keeping your money in a savings account, you're essentially guaranteeing that inflation will reduce its value over time. The solution is simple: start small, diversify, and never invest more than you can afford to lose. Point 3. The stock market. The stock market is the easiest way for beginners to get started. You buy shares of a company, and as that company grows, so does your investment. Sounds simple, right? But which stocks should you buy? For beginners, I recommend starting with index funds or mutual funds. These are collections of different stocks bundled together, which spreads the risk. Instead of picking individual companies, you invest in the overall market, which historically grows about 10% per year. Don't chase after hot stocks. Remember, investing is a long-term game. You want steady, consistent growth. Point 4. Power of compounding. Here's where it gets exciting. Compounding is the magic that turns small amounts of money into something life-changing. When you invest, you don't just earn returns on your initial amount, but on the returns themselves. Over time, this creates a snowball effect, so growing your wealth exponentially. Let me give you an example. If you invest just $1,000 per month, starting at age 20, by the time you're 35 with a modest 10% return rate, you'll have over 3.5 lakhs. But if you wait until you're 30 to start, you'll only have 1.3 lakhs by age 35. The earlier you start, the greater the impact of compounding. Point 5. Emotional investing. Fear and greed. Many new investors make the mistake of acting on emotion. Fear during market crashes, or greed when stocks are soaring. This is why so many lose money. Successful investors are disciplined. They set a plan, stick to it, and don't let emotions drive their decisions. Markets will fluctuate. There will be times when it feels like you're losing everything. But remember this: long-term consistency beats short-term panic every time. You now have the blueprint to start investing. Understanding the basics, managing risk, leveraging compounding, and keeping emotions in check. But this is just the beginning. In the next video, we'll dive deeper into how to pick the right mutual funds and stocks to fit your goals. So if you're ready to take control of your financial future, hit the subscribe button and turn on notifications to stay updated on the next steps. You don't want to miss what's coming next, because your financial freedom begins now. Don't let fear hold you back. Start small, stay consistent, and watch how your money transforms your future. Found Finance, where smart investing creates brighter futures.